All right. Well, hello everyone. We're excited to welcome you today to today's webinar brought to you by Black Bull Markets. Black Bull Markets is a multi-regulated, multi-asset broker based in Auckland, New Zealand. We provide an institutional trading experience for all traders, in part powered by our partnership with LMAX Group, a global financial technology company that operates a leading institutional exchange for Forex and cryptocurrency trading. So we're honored to have Joel Kruger with us today, an expert market strategist at LMAX Group, who's regularly featured on social media and in the global financial press. Joel joined LMAX Group in 2014 to lead the firm's Global FX Insights initiative. He holds a law degree and began his career in financial markets, in investment banking, and TD Securities in New York City. So in today's webinar, Joel will be providing us a unique opportunity to understand the current state of crypto trading. Joel will guide us through market movements, offering his analysis and forecast, all while presenting a fresh perspective on relearning what we know about cryptocurrencies. So we will also have a Q&A session at the end of the webinar. So please feel free to send in your questions, whether it's in English or Spanish. So let's welcome Joel. Joel, how are you today?
Hey, Adrian, thank you very much. It's great to be here. And thanks for everybody for tuning in. Always exciting to do these webinars and a pleasure and a lot to talk about. And I don't want to keep everybody too long, but so I want to kind of go through the important points here. But we are at a critical inflection point with global financial markets. We have this new frontier of decentralized finance and decentralized technology that is upon us. And I think that it's going to be very exciting to see where we go from here. And 2024 has been a pivotal, important year for all of this. So with that, let's get started and kind of go through some key points where we're at. I think some interesting insights that I'd like to talk about, and then run through the outlook with the major cryptocurrencies, with Bitcoin and ETH, and kind of where and what we're thinking about direction as far as those markets go. So first things first, a market snapshot, an overview of kind of just for many of you to kind of, it's always nice to see how these crypto assets, Bitcoin and ETH, have performed relative to other major assets that you're familiar with. So if we look at this chart here, you can see the year-to-date performance in Bitcoin and ETH relative to the rest of the major financial markets. You can see that Bitcoin is up 130% about. ETH is up quite a bit less, but when you look at it relative to the other major financial markets, significantly above those, outperforming 63%. And then you get a big drop off. The markets that a lot of people have been talking about this year, and understandably the S&P 500, the major US equity market exchange index at record highs, gold, of course, at record highs, and US equities overall making record highs. And when you hear those words of record highs and you think about what's going on with the S&P 500, with global equities, with gold, you think, wow, like great performance. And it is a wonderful performance when you see these markets up over 20%, both the S&P 500 and gold. But then when you look at Bitcoin, which is also making a record high in 2024, and ETH, which has yet to, we'll discuss that, it's pretty staggering to see the performance in these markets in Bitcoin and ETH relative to these other traditional financial markets. And then, of course, we have some other currencies, some major currencies there, which have been mostly hit across the board against the US dollar. So just a quick introductory kind of snapshot to give you some perspective on the type of markets that we're looking at when we're talking about what's been going on in the cryptocurrency market and why it's so exciting. Okay, moving on. So just as far as, talking about what's gone on, if we talk about Bitcoin and we specifically keep it to Bitcoin right now, although again, there's a lot of other exciting things going on beyond Bitcoin within the asset class. We've already all know that we've seen quite a big move thus far in 2024. And so where are we at right now? Is Bitcoin about to kind of collapse because we've seen such a big move, or are we going to continue to head higher? And what I will say is that the outlook remains highly constructive. So it continues to look like we believe that Bitcoin should continue to trade higher and trend higher. Of course, that's not without saying that there are going to be pullbacks along the way, but the outlook remains exceptionally constructive. And from our perspective, the strategy should always be, looking for opportunities to make increase exposure to this asset, this new asset, which is maturing rather quickly. So I'm just going to run through the bullet points here. Some of the important bullet points from my perspective. Q4 returns are suggesting that we could still see more upside in Bitcoin. So if you look at Q4 returns in Bitcoin, the fourth quarter of Bitcoin performance from 2013 to present, those returns are in excess of 80%. And at this point, right around now, I don't know exactly where we're trading at this second, but we're up about 65% on the quarter, which suggests that there's another, if just to match those returns, another 15% to go, which would take us through this much talked about elusive barrier at 100,000 Bitcoin to the US dollar. And so the analysis does suggest that despite the market, there's some trepidation ahead of 100,000, which is understandable. We should take that level out, right? And so based on fourth quarter analysis, by the end of the year, it would be completely conceivable to see Bitcoin trading up above 100,000 and certainly to have taken that level out. The projected kind of move on the 80% returns would take us to about 110,000. December returns, the month of December, we've just come into December, returns since 2016. When Bitcoin, was beginning to be a little bit more actively traded. So it's, when you look at from 2016 to present, the data set is a little bit better. Returns in December, 12%. I believe the third best performing month since 2016 for December's. And so another encouraging sign. In the halving, Bitcoin goes through its halvings every 4 years. And during those halving years, performance in Bitcoin has been even stronger in the month of December in the fourth quarter. And so in the previous two halvings in 2016 and in 2020, returns were at 28% and 50% respectively. So yet another sign that we could still see quite an encouraging and impressive performance for Bitcoin in December. The technical break this year that we saw, Bitcoin had traded up to a record high actually back in March, taking out the 21 record high. And then from March all the way through to just a couple of weeks ago, we had seen a massive consolidation in the price of Bitcoin between $75,000 and $50,000 until finally that $25,000 consolidation was broken to the top side. We saw fresh record highs, and you all know the story since. We've just been accelerating up towards 100,000. And that technical break through the 21 high, we'll talk about soon as far as what that projects to the top side and what we can expect from that as far as a medium term expectation as far as where things could go. The ETFs at the beginning of the year started out with a monumental win for the space with the introduction of the ETFs, the spot ETFs in the US, which basically symbolized, and not only symbolized, but actualized the adoption of mainstream market participants to cryptocurrencies, a way for traditional investors to have access to Bitcoin without having to go through the perceived complexities of custodying their own funds and having to do all of that while having an opportunity to gain exposure through traditional markets. A very big win there with the introduction of those ETFs, both on the Bitcoin and then later on with ETH, and record flows into those ETFs. So not only were they introduced, but the demand has been pretty much insatiable. I mean, the appetite has been very strong, and these ETFs have proven to be highly successful. which is quite encouraging again for the outlook. When we talk about what's been going on as Bitcoin does well, then people are going to look to success cases. And certainly MicroStrategy on the corporate side has been a massive success case. You've heard Michael Saylor in the news, the founder of MicroStrategy, and his kind of big bets on Bitcoin over the years, introducing Bitcoin into the treasury, introducing it into as a strategy for their corporate balance sheet to take on exposure. And clearly that's a strategy that's paid off quite handsomely and is getting a lot of attention, which is what it's done is it started to influence other companies around the United States and around the world to look to seriously consider taking on Bitcoin exposure. There are many other examples, but MicroStrategy is certainly at the top of the list. And then on a nation state level, El Salvador has been quite impressive with its initiative over the past several years to take on and build up a reserve in Bitcoin, and that has proven to be quite a successful case. And we're seeing the effects of that, the positive effects of that, play out through other nation states, and certainly there's other countries that are contemplating this as a strategy, and I think that we'll continue to see that going out for many years ahead. Of course, last but not least, another major catalyst in this fourth quarter for Bitcoin and for all the craze that we've seen. I know that many of you are watching from Mexico, but in the United States, a lot of people just sat down for their Thanksgiving holiday break, and a lot of people were talking about Bitcoin and seeing the moves in the market and kind of wondering what was going on. We've talked about a lot of the catalysts. Of course, the US election, another massive catalyst. Up until this point, the regulatory climate and the regulatory environment has been in the United States certainly the more mature and sophisticated global financial market. A market in the global financial markets is one where people look to for kind of as a leader in terms of the precedents that are set and how things are navigated, and the amount of flows that come in through the United States are quite significant. And so what happened to the United States as far as this goes is important. And up until this point, there's been an absence of regulatory clarity. We've been moving in the right direction when it comes to cryptocurrencies and regulation and oversight and how to kind of navigate the space. And we've continued to move in a better direction, but there's been a clear commitment on behalf of the incoming administration to be very friendly and warm towards cryptocurrencies overall, to Bitcoin and to more importantly, perhaps beyond Bitcoin. And that is going to have a significant impact in terms of how things are shaped and the direction that things take going forward over the coming years. And so this is a big win for the space. And we believe should be a formidable catalyst for ongoing adoption over the coming weeks, months, and years. So those are some really positive catalysts for what's been going on, and I think that they're obviously worth highlighting. Now, another topic that I think is really interesting that I want to spend a little bit of time on is Bitcoin versus gold, and why Bitcoin might be compelling as an alternative option to gold. We know that gold reserves have been built up around the world. We know that there are many large institutions, multinationals, governments that have exposure to gold. We know that gold is a hedge against inflation. It's a good diversification asset. But why Bitcoin over gold? Well, I think the first and most important point is that when we talk about intrinsic value in assets, it really is interesting with respect to gold. Gold doesn't really have all that much intrinsic value. Sure, there's the jewelry component to gold, but that as far as what that represents relative to what gold is, it's a tiny percentage. And so overall, gold is just this limited supply commodity that acts as a a kind of asset in which people use as this store of value because it's this limited supply hard asset, and perhaps because of some other things which we'll talk about soon. But when you compare it to Bitcoin, the comparison actually becomes quite interesting, because a lot of the properties are the same, and yet Bitcoin maybe has even more to offer. Certainly Bitcoin as a scarce asset, even more scarce and in lower supply than gold, wins out on that front. So if we're talking about money that is attractive, or an option for a store of value from a scarcity standpoint, which is a critical property when you're talking about a store of value asset, Bitcoin wins out against gold. If you look at it from an investment return perspective, relative to gold, we saw just in 2024 how the performance has been relative to gold. But going back since Bitcoin's inception, really, the returns have just been significantly more impressive than what we've seen in gold. And so that plays into this idea of the scarcity of Bitcoin, and why it's the supply demand side of the economics make Bitcoin attractive. As far as medium of exchange goes, the divisibility of Bitcoin and the portability of Bitcoin can't even be compared to when it comes to Bitcoin versus gold. We can move Bitcoin like that, around the world in an instant, whereas gold, of course, has to be transported, the physical gold, and it's a bit more of a headache. So when we talk about practicality, and God forbid situations in world history where people have need to move wealth from one place to another, Bitcoin provides a much more attractive option in terms of its ability to move. The fact that it's decentralized is another big advantage to Bitcoin over gold as far as the supply goes, and that that supply cannot be controlled in the same way that we would see with gold, which again can be controlled by many kind of multinationals, larger nations, central banks, and governments, and things like that. So the idea of Bitcoin as a truly decentralized asset is highly compelling. Cost of movement, again, just Bitcoin is meant to be super fast because of Bitcoin being a peer-to-peer solution for moving money, and because you are your own bank and we don't need third parties, clearly the costs are going to go down as far as that goes, and will get better and better. And so the idea of transacting in hundreds of millions of dollars at an insignificant cost is obviously very attractive. There are many other advantages. I will say that just as a last point right now, although we can keep going on, with the ratio between gold and Bitcoin over the years is continuing to narrow in Bitcoin's favor. Right now, gold is about 13 times larger from a market capitalization standpoint than Bitcoin. Bitcoin has been slowly gaining ground. And I think that for many that have exposure to gold and who love gold and continue to want to love gold, that's great. But to take part of that portfolio and to think about taking some form of percentage and to allocate towards Bitcoin, given what we've said, should be compelling. The holdup. So what is it that has been kind of maybe perhaps a bit of a critique against Bitcoin in this conversation relative to gold? I would say the two big points are consensus and liquidity. What does consensus mean? Well, one of the reasons why gold is so successful is it has such a deep, rich history of consensus, of people around the world that have said that this is the asset that we are going to use, and we're going to assign value to this asset. And because there's consensus around it, that is what gives it value. And so Bitcoin's obviously a younger asset, and so for there to be consensus around it, it takes a little bit more time. It's younger, it's newer, but what we're seeing and the trend that we've been seeing has been overwhelming as far as the direction that we're headed in, and clearly we continue to see more and more consensus around Bitcoin as the asset that it is. And liquidity, you always, if you're going to be invested in something, or if you're going to have exposure to something, you want to know that you can get in and out quickly. And again, we continue to see year by year more and more liquidity, deeper liquidity. I would even add the ability to trade these markets 24/7 is something that should not be understated as far as the access to these markets and to Bitcoin, and the players that we've seen come in on the institutional side over the past few years. It's just getting bigger and bigger. The pension funds are going to come in more and more. And again, what we've seen with the ETFs and the exposure there and the demand there and the banks coming in, liquidity is not going to be an issue. So it's highly scalable Bitcoin, and with consensus and liquidity, it just becomes that much more compelling. Just quickly, just to show you a little chart of Bitcoin versus gold over the past 14 and a half years, you can just see that the kind of the green line there that's been trending up, the top line that's moving up to the right, as you can see, the investment of $1 invested in Bitcoin back then to today, relative to the little dotted line on the bottom there, which is $1 invested in gold, has been going up. But you can just see how dramatic the difference is in terms of where you are at if you've been putting your money in Bitcoin versus gold. And then the orange line trending down is the ratio that we've talked about between Bitcoin and gold. So Bitcoin is kind of continuing to kind of close the gap with gold as far as an asset that needs to be considered on that scale. And I think that we're going to get there. So if anything, this chart shows how much potential we have going forward and where we're at. And it's still quite early as far as where I believe we could get to. And so, yeah, hopefully that gives you a little bit of a good insight and overview. Now, just to talk about, go back and talk about some charts and kind of where we're at today, just to round things out. To give you a big picture overview of the levels and kind of what I'm seeing. If we look at the Bitcoin technical analysis right now, this is big picture analysis. I'm going to show you a monthly chart and kind of show you where I think we're headed next over the coming months, and kind of to give you an idea. So this is not, giving you levels for today and tomorrow, but just to give you the big picture view. So here we go. And so the story here is that in 2021, there was a high that was set at 69,000. As you can see here, and there was a drop in 2022, a low that was set at 15,460. So about $53,000 in change in a move. And so as far as technical analysis goes, whenever you break out to a new high, it opens a measured move extension equal in size. And so if we take a 53,540 move to the top side, we get 122,000 and change. Okay. And so I think that this is where there's momentum right now. So we talked about fourth quarter returns and the possibility for 110,000, but whether this carries over into 2025 and has to kind of get a little bit more to get there, I think that we are on track for this next upside extension that'll take us up towards 122,500 as the next kind of big kind of area before we start to maybe consolidate for a little bit and then start to think about the next leg higher. But I still think that there is quite a bit of room for gains over the coming weeks and months, given this analysis and given the breakout that we're seeing in 2024. So as far as whether we take out 100,000 or not, I think that that's going to happen quite easily, and then we'll see where we get to from there. On the support side, if you're thinking about potential pullbacks that we might see, the best thing to do right now, I would say, is to take previous areas of resistance. So that 69,000 high from 2021. And then, of course, the record high that was seen this year around 74,000 and change. So let's call it 69 to 75,000. That would be an outstanding area if we were to pull back, to be expecting the market to be very well supported now going forward. So I think that if we do see any significant pullbacks, that the market will be exceptionally well supported now into the $69,000 to $75,000 area. That's not to say that we can't go below there, but I do think that what I will say is that I don't expect there to be any meaningful dips for any meaningful period of time below 69,000. And if we did see something like that, it would be just a very short-lived dip. So that's the story as far as Bitcoin goes. Now, What's become even more interesting right now is what I talked about was how exciting things are as far as what lies beyond Bitcoin. We're still very early, and so there's going to be a lot of attention given to crypto assets beyond Bitcoin. If we think of Bitcoin as a store of value, it's kind of simple, which is the beauty of Bitcoin in terms of what it is. But of course, as technology moves forward and as we see innovation, we're seeing different forms of ways to kind of make, instead of looking at a company, you're looking at an organization. Instead of looking at shares, you're looking at tokens and tokenomics. And so there's this new way of thinking about financial markets, and that's what we're seeing. And a lot of that innovation is happening on Ethereum, where you get the innovation side. So if you think of Bitcoin as kind of like a gold 2.0, then you would think about Ethereum and what's going on as kind of like, or I would think of it as an S&P 500 2.0, as kind of the next version of innovation and technology, and where we're going with decentralized finance and the future of money and technology and all the exciting things that are happening there with projects being built in this new internet, this what we call Web3. And so over the past several weeks, we're starting to see a shift. Bitcoin has been in a very strong uptrend, or ETH has been in a very strong downtrend since 2021 against Bitcoin, just kind of getting hammered. But over the past few weeks, we've started to see this signs of a bottom, where ETH is bottoming out, where ETH is starting to show signs of relatively outperforming to Bitcoin in recent weeks. And that's not to say that Bitcoin shouldn't be appreciating against the US dollar, but we're starting to see ETH catch up a little bit. And it makes sense in the context of what I'm saying, because when you have a new US administration coming in and a world that's becoming more turned on to cryptocurrencies and more friendly regulatory backdrops and kind of a warmer climate, it's going to invite certainly more reassurance towards the outlook for these projects and tokens beyond Bitcoin and this innovation that we're seeing. And so Ethereum is starting to really benefit from that. ETH, which is the currency Ether of Ethereum, is starting to make a move to the top side. So let's look at the analysis there quickly and give you an overview of what's going on there. So here it is. Here's a monthly chart. So right now it's looking at retesting the high from this year, which is at just over $4,000. And then, of course, once we get above there, then we're looking at the record high from 2021. If we do the same type of analysis, where we say that the 2021 high to 2022 low move was a $3,900 and change, almost $4,000 move from 4,870 all the way down to that low in 2022 at $880, then once we do get back and take out the record high from 2021, which I believe that we will do, it will project the next measured move upside extension equal in size, which will take ETH up towards $9,000. So a lot of people are talking about ETH getting up to 10,000. Well, this is kind of a realistic way when you think about the technicals, structurally how we can get there if we're moving in measured moves. Certainly we could see on a breakout above the 2021 high, which is just ahead of $5,000, that we could see an extension that takes us up towards the $9,000 area, and then perhaps we then want to test 10,000. So I think that there's a lot of exciting things that are starting to go on, and we're seeing that reflected beyond Bitcoin as per this chart that we're looking at with ETH. So exciting times ahead, and very excited to see how things play out into 2025. But I believe that the outlook is quite constructive, and it's a good time to be taking interest and wanting to be a part of what's going on with the world of cryptocurrencies, with Bitcoin and beyond. So with that, I will pass it off to perhaps some question and answers. Adrian, if you want to take over and kind of see what's going on that front. Thank you.
Wow, that was an incredible information, Joel. Thanks so much for that.
Yeah,
and I hope everyone has had their notebooks out, because I have. And now it's time for some questions. So let's get started. Joel, are you ready? Let me look
Oh,
at the chat.
I usually people are shy about questions. I
Oh
will
yeah.
say that I don't know that I will have the answers. I will do my best, but I'm happy that there are
Okay.
questions. So certainly feel free to throw them out there. Go
Okay.
ahead.
Well, I'll start with mine though.
Yeah,
I'll see that well, the participants will send in through some questions, so I'll start with mine.
yeah.
So it looks like the industry is kind of getting flooded with a lot of cryptocurrencies. So I would ask you, what should we look for when investing in one in particular, or if your strategy is just mainly focusing on the major ones, which is Bitcoin, Ethereum. What's your take on that?
Yeah, what I would say is that if you're looking to kind of just start to dip in, um, the best thing to do is to dip in with the most familiar, and to do that in a very cautious way. So that would be then taking on exposure to Bitcoin and kind of learning about Bitcoin, learning about the value proposition of Bitcoin, what's so exciting about it, because ultimately if you're going to get into this, in my opinion, again, I don't think of this as trading. I think of it more as investing. But in my opinion, if you understand the value proposition, then it makes it that much more exciting and it makes it that much easier to be able to kind of commit to a strategy where you're kind of just slowly building your exposure on a dollar cost average basis, on a month to month basis. Because, one of the things that's so exciting about Bitcoin that people have used as a critique, and yet it's actually the opposite. It's actually probably its biggest strength is I have never seen an asset that has been beaten down so many times to such a degree as Bitcoin has since inception. And yet with each time it's been beaten down, it's come back to make a new record high. I've never seen that over the course of my career, which has been, quite long. And I don't know that there's been an asset like this in the history of financial markets that has come off as hard as it's come off and yet come back each time to make a record high. What's even more encouraging about that, and what I would refer to that is every time it pulls back and makes a new record high, it's another stress test that's succeeded in terms of validating the asset. What's even more encouraging is that with each time it pulls back and makes a new record high, it kind of comes back to a higher low. It doesn't quite go back as low as it was before. Volatility starts to go down. People are critical because it's so volatile, but I would say that if you believe in the asset and where we're going, the trend is actually showing volatility going down. And so you want to be in an asset where there is volatility, but it's trending down, which kind of shows you that it's headed in the right direction. So yeah, to answer your question, is start off by kind of learning through the biggest asset. And then as you learn about Bitcoin, then maybe look and see what the value proposition of Ethereum is and what kind of interesting things are going on with decentralized finance, and slowly but surely kind of move your way into other areas of interest and branch out from there. But, best to always come into the space through, I think, Bitcoin first.
Sounds good. So you'll probably see it as um, looking at each one individually, seeing their value proposition, like you said. Pretty interesting.
Certainly. Yeah, absolutely. I mean, there's a lot of projects that are dedicated to redefining and rebuilding the infrastructure within various different areas, whether it's file storage beyond money, right? Beyond Bitcoin, but whether it's file storage or video storage, or if it's gaming, or again, if it's in the area of decentralized finance. There's all these different areas. If it's in real estate, all of these things are being kind of rebuilt and redefined using Web3 and DeFi and tokenomics and blockchain. And so it's all exciting. And so you just kind of, the principles don't change from an investment standpoint as far as what it is that you look at. You look for the same things that you probably were looking for before, while understanding what the kind of advantages are to the tokenomics.
No, it's really interesting. So, we'll go with the second question. So, what do you think is the viability of having government cryptocurrencies in the future? You see that long term, short term? What's your take on that?
So I'm going to assume that the question is about central bank digital currencies, and my view of central bank digital currencies are that's all fine and good, but they're not. It's a different conversation. It's not, it's not a decentralized currency, right? It's very, in the very definition, it's a digital currency that is controlled by a government and is centralized. And the whole value proposition here is that we're looking at decentralized money and the power of decentralized money. Bitcoin was born out of rejection of the kind of the system in which money was being printed and printed and printed, and people's value was being lost, right? Because of money printing. And so it was born out of this rejection of the system and this ability for central banks to just continue to print their way out while devaluing people's overall wealth. The idea of having this decentralized currency became very attractive. Now, that's not to say that there aren't advantages to centralized currencies or a central bank digital currency in terms of being able to facilitate certain things quite quickly, get money out to the public rather quickly if it needs to, but at what expense, right? So I think that you need to be able to have the advantages of both. There's privacy associated with rights to privacy associated that you get with interacting with digital currencies, and not nefarious or illegal, but just my right to have a privacy in terms of the transactions that I have, and not wanting to maybe give up so much information through a central bank digital currency that might have access to everything that I do. So I think that central bank digital currencies they're fine, and they have their advantages, but I think that I would argue that both are needed and very much kind of wanted.
Okay, interesting take. So let's move on to the participants' questions. So first one, what key indicators do you consider most effective for technical analysis in crypto markets, and how to combine them with other fundamental factors?
Yeah, so as far as technicals go, I always like to say that technical analysis is the purest form of fundamental analysis. And what I mean by that is that, if we acknowledge the very basic principle that everything is discounted into the price of an asset, then if we look at a chart, then we're looking at everything that's possibly discounted into that asset. It's giving us a big picture kind of blueprint overview of everybody who's exercising an opinion in the market. So I think that that's kind of the first thing that I'd like to say. I do think it's important to understand what's going on with the fundamentals. I think it depends on your time frames from the fundamental standpoint, in terms of how you're trading, what your time frame is. I think that fundamentals become less relevant perhaps on a shorter term time frame. You could argue also that they become less relevant on a longer term time frame, but I think it is important to look at the fundamentals and have an understanding of what the fundamentals are, because they only make you that much more kind of strong about the position that you're taking. Now, as far as technical indicators go, I think that probably the most valuable indicators from my perspective and in my experience are, I would say, at the top of the list, probably an underappreciated indicator called ATR, average true range. And what that does is it basically tells you what the average range per the time frame that you're looking at is in that market, right? So it'll give you a very good snapshot understanding of what I can expect from this market. If I'm looking at a daily chart, well, then how much does Bitcoin move a day, right? So, okay, Bitcoin moves about $1,000 a day, right? So whatever it is right now. And so that gives me an idea when I'm looking at the market and I'm kind of watching it on a day-to-day basis, that I know that it can range from, $1,000 up and down, and that doesn't really mean much, right? So it's very important to have an idea of what the ATR is, which the average true range is. And so I consider that to be a significant indicator. Another important indicator that I like to look at is RSI. I think that RSI, being the relative strength index, It's an oscillator, so meaning it goes from 0 to 100, and it basically tells you, and it gives you an indication of how extended the market is, whether it be overbought or oversold. Now, I'm not necessarily recommending that it's used as a trading indicator per se, rather than just an indicator of kind of giving you an idea of how this market is feeling right now. Technically speaking, the RSI, when it's above 70, is considered to be overbought. It tells you the market's overbought, which could perhaps be warning that the market might want to cool off a little bit. And below 30 is considered to be oversold. Now, I have been a little bit more strategic about using that indicator over the course of my career. If I'm using it for trading, I only look to markets that are above 80 on, let's say, a daily, a weekly, or a monthly chart, or below 20 for an indication that potentially we could see a slowing down, certainly of momentum, whether it's one way or the other. So if, for example, I see a market that is trading above 80 on a daily or a weekly or a monthly RSI, my feeling is that, okay, it doesn't necessarily mean that the market's going to drop significantly. What it does mean is that we probably are going to see limited upside for a period of time to allow for those studies to kind of unwind, which means that we could enter a period of consolidation and allow for that technical study to unwind from above 80 back to more normal levels, readings between, let's say, between 30 and 70. So I think that it's RSI is a wonderful indicator to kind of give you an idea of how the market's feeling and kind of where it is and where it should be. I'd say that those two indicators are probably the most significant, other than just kind of classic pattern recognition, higher highs and higher lows and trend lines and things like that. So yeah, hopefully that gives you a little bit of an answer there.
Thank you, Joel. Next question. So at some point there will be a significant 50% retracement and then a pullback. When do you anticipate this retracement, and to what level? Dr. Beccaria from London.
Okay, so thank you for the question, Doctor. I don't necessarily know that I can agree that we will necessarily see a 50% pullback. I'm assuming you're talking about Bitcoin, and if you are, then it's possible that we do. I think that a 50% pullback from current levels where we're at right now is I would say more improbable. I think that that's quite an aggressive pullback, because we'd be seeing a move below $50,000, which I think would be quite. I mean, if that happened, I think it would be quite an outstanding opportunity to be looking to, build some more exposure. But I think, to your point, we are going to see retracements. We are going to see corrections. And if I'm going to talk about that in the context of the question that just kind of came before, it's important to look at indicators like an RSI, I would say, to say, okay, well, the market is pulling back now. Is it compelling for me to want to maybe look to add or increase exposure? And so my recommendation would be, if you think that there's going to be a pullback and you're not comfortable getting in at current levels because you think that that's imminent, then my best recommendation would be to use a daily chart with Bitcoin, pull up an RSI, a default RSI to a 14-period RSI, and then maybe wait for a pullback that shows the RSI reading dipping below 25 or 20, whatever that means as far as the retracement. Maybe that does coincide with the 50% retracement, I don't know. But I think that if you used an RSI and you looked for a significant pullback where the RSI on the daily chart was trading in oversold territory, I would say, again, not 30, but maybe below 25 or 20, that would be a good indication that there could be soon a reversal back to the top side, respecting the overarching trend, which has been an uptrend. If you believe that Bitcoin is going to go higher, despite your view that we might see a 50% correction, if you believe that ultimately after the 50% correction that we're going to go higher, I would say, instead of looking for a 50% pullback, be more watching that RSI on the daily charts, and look for opportunities to maybe be buying the pullbacks that have us down on an RSI on a daily chart below 25.
Good. Last question, Joel. So
Yeah.
given the rise of AI and machine learning in financial markets, do you see any emerging trends or tools that could improve cryptocurrency analysis and trading strategies?
That's a great question. It's beyond my scope as far as answering, because I am only just now learning about the possibilities with AI, and where that could take us. I do think that there are a lot of exciting things that can happen at this intersection between AI and blockchain technology. And the biggest point I would say is that there are a lot of powerful things that come with AI, that are just incredible in terms of the potential, and we're only just starting to see them. At the same time, there have been ongoing kind of concurrent concerns about knowing what's real and what's not real when it comes to AI. And so when you take that, and you couple that with technology that actually is built on this foundation of being this open ledger and being able to verify and validate and to know what's what, I do think it sets up a wonderful kind of merger between these two, technologies in a way where they both complement one another, where you can have AI working with decentralized technology and blockchains to be able to kind of have a space where it can kind of be a check and balance to know how to validate and to see what is real and what is not real, and to kind of have a better idea of those solutions. I do think that there are a lot of interesting things going on in the world of AI, and there are a lot of intersection going on with various projects, which I'm not going to get into right now. In cryptocurrencies, there's some interesting tokens that kind of are attacking AI. There's a whole, if you want to look at it, look it up. There's a whole space within cryptocurrencies called DePIN, DEPIN. It's an acronym, and you can look at that space, and it's kind of at the intersection of cryptocurrency and AI, and the possibilities there. And I would encourage you to go look up the DePIN space and see what's going on there, because I think that you'll be excited about what you might be seeing, and it might give you more insights into what the possibilities are.
Thank you, Joel. Thank you for that.
Yeah. Pleasure.
I was speaking, I was muted, but well, thank you. This really interesting insights. Obviously, AI is going to be intertwining with blockchain, I'm pretty sure. So we're up for some interesting,
Yeah.
things in that space.
Yeah, absolutely.
Well, I hope everyone takes advantage of the tips and valuable info that you've covered today.
Yeah, I just quickly, sorry to interrupt. I just
No, go ahead.
I see the attendees there. I can see the list on my left here on the screen, and just I want to just kind of personally let you know that I'm looking. I see the names, and thank you all for kind of tuning in. I really appreciate it, and I enjoy doing this. I have been in this space, again, as the introduction set out. I came in in banking, and then I went into currency trading, and then I just kind of was lucky enough to find my career as a currency trader into cryptocurrencies, and kind of be around at a time when all of this is happening, to be living my life at a time where I can be just so lucky to kind of be able to kind of throw myself into this with the background that I have, and to have been a part of this story that we're seeing right now from basically the beginning. It's just been exhilarating and a real privilege. And so to be here and to be able to talk to you and to kind of share this with you, I believe in what we're doing here, and I believe in the space. And so thank you all for tuning in, and I really appreciate that. And hopefully I can be here to do more to help out and to offer my insights.
Thank you so much, Joel. And we'll look forward for another webinar. Maybe we can get more into AI, maybe.
We might get into
Huh?
AI. We might have to have another panelist on for that because
Yeah,
I'm a bit of a
that'll
Dumbo when
be
it comes to
interesting
that. But
conversation there.
yeah, it is a
Yeah.
great conversation. And by the way, for the record, for all the people tuning in, I am not real. I am AI. Just so you know, this is not a real person. This
Oh,
is
okay.
AI.
I
Yeah,
knew it.
doing this. Yeah, AI Joel. Okay, all right. I'll let you wind it down, and then we can fade out. And thank you everybody for tuning in.
Sounds good. Well, thank you so much, Guy. Just a reminder, we invite you to explore the crypto page on our website, blackbull.com, where you'll find over 30 cryptocurrency pairs available for trading. Our CFDs allow you to trade crypto without needing to own or manage the underlying assets. You can enjoy leverage up to 1 to 100, lightning fast execution, and tight spreads on 11 major cryptos. Additionally, we'll encourage you to visit our social media channels, blogs, articles, where Black Bull Markets and LMAX Group keep you informed with the latest market news and important updates. Well, thank you, Joel, for preparing this valuable webinar, and thank you to our community for attending today. We appreciate your time and participation. So, thanks so much, guys.